Saturday, April 19th, 2025. I hope you are having a wonderful weekend. I have one request, and that is if you end up liking this content, hit the subscribe button. But without further ado, let's go ahead and dive on in. First chart from Bitquant. If you think the top is in, then you must also believe that this is the weakest cycle Bitcoin has ever experienced and that it's on its way to die. I submit my alternative viewpoint, which is that it's not going to look how it's always looked. I'm very bullish for Bitcoin after 2025, but there are just some things that need to work itself out. I just keep on running into this mindset where I'm seeing people locked into this idea that it must happen in 2025. And if it doesn't happen in 2025, Bitcoin is on its way to die. Why does it have to be like that? I feel like I'm living in a world where it's like I'm screaming out. You know, I'm that meme with the guy from, I don't know, like the early 1900s, standing up, raising his one objection. And I know that many of you are with me on this. Guys, it doesn't have to happen in 2025, but I'm seeing all over the place these people calling for it to happen. And listen, if it doesn't happen in 2025, but it does happen, which I'm expecting it to happen, where we would for sure get up to this red line, whatever, then do you understand what that means? That means that Bitcoin's peak is going to be much, much higher than 108,000, 109,000, like what we saw on January 20th. We're going much higher than that. Just give it some time. Just like early 2025 wasn't this beginning of the year that everyone was expecting. It doesn't have to happen that the bear market is in 2026. So, all right, moving on. Off my soapbox. For all the Bitcoin will follow gold narrative followers, every time GLD/XPX has a strong rally, Bitcoin SPX has had months of underperformance. If you're betting on something else to happen this time, you better have a good reason for doing so. If anything, this chart is saying try longing again in 6 months at the least. Okay, are you okay with that? You know, this is another one. It's fine. It is fine. If we're seeing gold go parabolic, we're seeing it be the hot topic for today where people are really excited about gold. I took some off the table last week. I'm not going to cry about it if it keeps going higher. I'm still in position to profit pretty well. But so there's charts going around where people are sharing, all right, after gold rotates, immediately after gold rotates, Bitcoin is going to skyrocket. I've seen lots of comments on my videos talking about that. And my mindset is, yes, that's true. But we live with crypto in such a world where we expect everything to happen so quickly, because historically, everything has happened really quickly. When Bitcoin makes its violent moves, it happens within weeks and then it's over. And so with gold here, if we're going off of gold's timeline, gold moves much slower. It's like it can continue to remain in this cycle where it just continues to climb for quite a while, or that we wouldn't really see signs of weakness for quite a while. And so, okay, can you wait? If this is what the market gives us, can you wait 6 months at least for an ideal entry on Bitcoin? Now, there's certainly a possibility that Bitcoin could hit a new all-time high before all this happens, you know, within the next couple months even. But if we're talking about that big move, that big move, it can take much longer than that. So just be mindful whenever you see a chart pointing out, you know, anytime gold cools down, Bitcoin pumps. Sometimes, but not every single time. Moving on. Okay, Raoul Pal, very smart man. I have a lot of respect for him, and he's posted. There's been lots of charts posted like this. I've talked about a different perspective in 2022. M2 rose for a while, but Bitcoin's price went down. So here's Raoul Pal. I know many of you want to see the updated version of the Bitcoin versus global M2 chart. Here it is, just a very small part of weekly macro investing tool, MIT, as part of RV Plus. It is time, give or take a few days. So Raoul Pal has been incredibly bullish, and he mostly measures things in terms of manufacturing. He says that manufacturing has a much stronger correlation to Bitcoin's price than everything else. And he's looking at a chart like global M2 money supply, and he's saying Bitcoin is going to be very bullish. If we're going to go along with M2, what we have coming up in a few months is Bitcoin at $140,000. That all sounds fine on paper. Now, I'm not going to read this whole rebuttal by TXMC Trades. One thing that I will say about TXMC is that he's pretty passionately, contrarian. And he gets pretty animated when he sees charts like this. TXMC makes some valuable points. So here we go. You can't create a daily or weekly time series of global M2 when the United States is only updated M2 on a weekly basis and all others are monthly. You're looking at basically 30 out of 31 days of FX fluctuations. Only China, Japan, and the USA have updated in March, etc. This matters a lot when also considering China is 46% of global M2. I did talk about that in my short video that I posted on X and on TikTok. China, the M2, their contribution to global M2 is far greater than the United States or any other country. China's is going straight up in a straight line. Everyone else is pretty stagnant. Some are even going down, like Japan's going down. Really fascinating to me. I did not know that until I saw that chart. All by itself, and the only major country whose broad money supply is above its post-COVID peak in dollar terms as of the latest figures. So the chart that I showed, I think I showed it in yesterday's video, same deal. China's is going up crazy. Everyone else is either flat or down or just kind of climbing slowly. So what does that mean? What does it mean if China's M2 is going up dramatically? Does that mean that Bitcoin's price is going to skyrocket? I don't know. I don't know the answer to that. Now, before making this video, I saw a post that China sold something like 15,000 Bitcoin and bought gold with it. So if that's what it's going to be as a result of China's M2 money supply increasing, I don't know if this is something that we should assume is going to be a perfect correlation moving forward. Now, this is not everything. It is something. It's something that I'm very closely paying attention to. I think it should have an effect on Bitcoin's price, an effect to the upside. The thing that I would say is you just have to be careful of being married to this idea that M2, global M2, is going to cause Bitcoin's price to go to $140,000 within a couple months. I think that's a little bit of a stretch. Okay, moving on. Now listen, long enough timeline, I am incredibly bullish. I'm very, very bullish on Bitcoin. And so post by Fred Krueger here, not to be confused with the murderous Freddy Krueger, etc., whatever. In the 1980s, all right, the rich people need a place to store their wealth. In the 80s, that was U.S. bonds. In the 90s, it was U.S. stocks. In the aughts, it was U.S. and London real estate. In the 2010s, it was U.S. tech stocks. Since 2020, Bitcoin has massively outperformed, and now we have trade wars, bad for stocks, bad for real estate, bad for bonds, good for gold, and ultimately great for Bitcoin. Ultimately, short term, lots of noise. Ultimately, very, very good for Bitcoin. Once we get to Bitcoin at $1 million, we start rotating into the next asset class, which in his opinion is super intelligent AI. I posted an interesting diagram from Andrew Kang a couple of days ago. In particular, think iRobot, robotics, humanoid robotics, maybe humanoid, as being a potential niche that could go from millions to seriously multi-trillions. We'll see. So super intelligent AI, what that even looks like, I have no idea, but that will be the story. So we'll see how that goes. Just keep it in mind. I can't envision a world moving forward where Bitcoin is not over $1 million in our lifetimes. I mean, maybe within a decade, maybe it'd take a little bit longer. We'll see. But $1 million Bitcoin, until that happens, that's where my primary focus is. And then we'll see about after that. All right, so that is everything for Bitcoin, but I have a lot more to cover. But time out. Just want to remind you guys, if you want to get access to cryptocurrencies that are a little bit more difficult to get access to, my recommendations are BingX and BitUnix. I have referral links in the description of this video. With BingX, if you're in the United States or Canada, you need a VPN. I have a link to 3 free months of NordVPN in the description of this video. If you use BitUnix, you don't need any of that. And so sign up for BitUnix. They're both non-KYC, but back to our regularly scheduled programming. A chart that I would say is a little bit misleading, but still of some sort of interest. The VIX closed, Charlie Bielio here, the VIX closed above 50 last week for the first time since April 2020. In the past, what has that meant for stocks going forward? And you see lots and lots of green here. Within 1 year, all green. Within 2 years, 3 years, 4 years, 5 years, all green. Whenever we see a weekly close above 50 for the VIX, here's the thing that I want to point out to you is if you can actually, I don't know if you can see this on your phone or your computer, if you look at all the dates, just do yourself a favor, look at all the dates and see why I would consider this a little bit misleading. Every date here is either 2020 or 2008. Every single date between now and 1990. So every date in the last 45 years, it's either 2020 or 2008 until you get to 3 of the last 4 dates here and you see 2009. So what you could instead say with this chart is when the VIX got over 50 on a weekly close in 2020 and in 2008, there was positive movement over the next year, 2 years, 3 years, 4 years, and 5 years. So we'll see what 2025 looks like. Should we expect the S&P 500 to be higher a year from now than it is now? Maybe not, or maybe this would be a repeat of 2000. Now, you could make a compelling case that this is actually what we should go off of because of what happened in 2008 is they introduced quantitative easing. And so 2008, we had that. 2020, we had a massive debasement. What I think historically is going to be looked at as great debasement number 1. And that this is kind of our new normal, is that there's going to be significant debasements of currencies around the world after the next crisis. It just depends, in my opinion, as to what that's going to look like. If we are going to get a crisis and how we respond to that. As of right now, it's not really much of a crisis if you were to ask Jerome Powell, and I think Jerome Powell could actually make a compelling argument based off of the data he goes off of. Inflation is coming down. Unemployment is not rising all that much. There are other signs, I shared that in my video yesterday, that would communicate that there are other signs of weakness that we can see, including bankruptcies for companies larger than 50 million in market cap, and including, what was the other one? There was something else that the GDP estimates from the Atlanta Fed. So we'll see. We'll see what this looks like. It is something to keep in mind, high VIX, fast forward a year, 2 years, 3 years, 4 years, 5 years. Now, the only real thing that I would question here is what's this going to look like a year from now? Are we down enough, and then can we recover enough? And I have 2000 in my head, but again, there wasn't quantitative easing at that time in 2000. Just something to play around with in your head. And again, that was from Charlie Bielio. Guilherme Tavares, this is my second time showing a chart from him. Dow Jones Transportation as an indicator for recession. With the exception of the 1987 crash, every time the 5-month ROC of the index dropped below minus 25%, the U.S. was either entering or already in a recession. As of the market close on April 15th, 25, the current ROC equals negative rate of change, negative 23.81%. So we're not quite there yet. And you can see huge drop in great financial crisis, just a little blip in 2020, and then you can see historically 2000, 1990, and plenty of times in the 70s. And so will we get there? I would assume that we will. I have been saying I do believe we are already in a recession, and so we'll see how that goes. Lots of arguments as to why we are in a recession, and I would say some arguments as to why I think the stock market has a little bit lower to go, including this. I mean, retail is never right. Retail, this is my point with this post. Retail is never right. Okay, so global markets investor, they say there are no signs of retail capitulation yet. So last week, retail bought the dip, and so far, so good. If they did it just for short-term trades, awesome. Congratulations, retail investors. But they've been buying a lot. So retail flows as a percentage aggregate of market cap, buy minus sell. Retail is such a small blip in this. It's such a small percentage, but individual investors have bought the most NASDAQ 100 stocks on record last week, and not even close. Mom and pop investors have bought stocks as never before. The buy the dip mentality is so strong, it suggests the bottom is not in. And I would say with some level of certainty that the bottom is not in the stock market. Now, I think we are potentially in the middle of a relief rally where we would put in a lower high. And given the depth of the correction that we've seen in the stock market, that could be a significant relief rally where Bitcoin could hit a new all-time high. But in my opinion, we are going to go lower in the S&P and in the NASDAQ. Now, this is something that I find to be very interesting. So this is VIX volatility plus AAII bears plus I.I correction respondents. This equals record fear since 1989. That is kind of ridiculous. It's kind of ridiculous that this would be the scariest moment since 1989, given everything that has happened in the last 45 years, about 35 years, excuse me. But okay, maybe my favorite chart this month, you're looking at the highest reading on record in 1,841 weekly stock market sentiment observations from 1990 to 2025. The inputs, the VIX volatility index, plus AAII survey bearish respondents, plus investors intelligence survey respondents who expect a correction. In 10 of the last 11 fear spikes, the S&P 500 went on to gains over the next 52 weeks. Returns were often large too, 31%, 21%, plus 21%, and so on. There's a 59%, a 36%, etc. So, going back to this chart, this is certainly where is that? Oh my goodness, here we go. These two charts here. This would, unless this time's different, give some credence to this idea. We had the VIX close over 50, that a year from now, the S&P 500 would be higher than where it is now. Is this time different? Now, it did say 10 of the last 11 times, so there was one time when the S&P 500 was lower than it was the previous year. So what do? At some point, we buy the dip. I'm just not buying the dip just yet. That's not entirely true. There is something that I am buying that I'm very excited about loading up on, and I'm willing to hold long term, aside from like my gold miner stocks. And let me actually get to that post here. I'm going to skip ahead for a second. I've been really intrigued following this account. I started following them this week. So Devoted Dividend Investor, he's really motivated me. So which are you choosing? There's one in particular out of these that I've been loading up on, DCAing basically, with a very high goal of getting to a certain point. So 100K into VOO, you get 1,410 dividends a year, 100K into DGRO, 2,360 in dividends a year, 100K into SCHD, 4,010 in dividends a year, 100K into JEPQ, 12,000 in dividends a year, 100K into FEPI, 28,000 in dividends a year, 100K into MSTY, 80,000 in dividends a year. Okay, so I'm just I'm looking for alternative ways to add to my portfolio and ways to earn some kind of passive income. Now, I will tell you, MSTY is a MicroStrategy yield generating. What they do is they sell options on the MicroStrategy stock because the premiums are very aggressive. Now, I have some concerns about that. Given is MicroStrategy ever going to liquidate their assets, the MSTY ticker will go down. And so this is a very high risk ticker. I have a little bit of that, but that's not the one I'm excited about. It's JEPQ. That one, I have a goal. I don't know when I'm going to reach this goal, if I'm going to reach this goal of getting 10,500 shares of JEPQ. What that would provide me in dividends would be an average salary in the United States just in dividends. So 10,000 shares of that, as of right now, 10,500 would be almost $500,000. I am far off. I just started this journey a couple days ago. So listen, I have like 10 shares of this, but 10 is better than zero on my way to 10,500 shares of JEPQ. It's NASDAQ related. And so I'm going to keep on DCAing this no matter where the market goes. Check out this account if that's something that interests you. Really fascinating stuff there. But all right, the one that I skipped, was it just one? Yeah, it was just the one that I skipped here. This is gold, and this is from Peter Brandt, a very experienced investor. I personally was just fascinated by this particular account. So what happens at major tops? This was the blow-off top in gold in 1980. The high was not exceeded for 28 years, and it was a fascinating top worth telling about. Back then, I would call orders into the pit, speaking periodically to my pit broker. I was speaking to him on January 21st, 1980, the very minute of the top. The market had been crazy up to that point. At the very high ticks, he said something weird was happening. Volume completely dried up. There were no bids and no offers, no trading. So what happened? All the pent-up demand and short covering dried up. All the buying had been satisfied. Supply and demand were for a moment in perfect balance. And suddenly supply started to show up. The top was in, limit down, locked for the next 4 days. And within 2 months after January of 1980, the gold price went from a little over $800, I think that's $875, all the way down to $450. And I wouldn't be surprised in March of 1980 that people were preaching, hey, it's time to buy the dip, time to buy the dip. And gold continued to go down much lower from there. Just keep that in mind. You see a blow-off top like this, which is, I would not say what we're experiencing right now is comparable to this blow-off top, because look at where gold was in December of 1979. It was $450 an ounce. There was a point where it was $400 an ounce in December of 1979, and then it doubled. November of 1979, excuse me. It doubled in 2 months. It did more than doubled. So gold has gone up 50% in the last year. This is doubling in 2 months. Huge difference. But if you were to see the price of gold double in 2 months, that would be a good sign to exit. I mean, just same deal with Bitcoin. You know, I remember December of 2017, knowing for certain that it was almost over, and then $20,000 ended up being the peak. I thought that was interesting, especially knowing and reading an account from somebody who saw that play itself out in real time 45 years later. You're not going to be able to find something like that very often on X for sure. So another thing that may concern only me, U.S. federal government spending versus tax revenue. Over the last 10 years, U.S. federal government tax revenue has increased 60% to nearly $5 trillion, while government spending has increased 95% to over $7 trillion. The result, a doubling in the U.S. national debt from $18 trillion to $36 trillion. This is a massive, massive concern, especially with interest rates being where they are, and especially in 2025, with the fact that we need to refinance this debt. And we cannot do it at current rates. It's going to be really interesting to see how this plays itself out. But this is a big reason why I am just in favor of things like the Department of Government Efficiency, even though it's a ridiculous name, and even though they're barely making a dent, the fact that they'd be doing something to at least reduce this, sign me up for that. My goodness. The interest on our national debt is now, I've been saying this literally since 2010, it is the biggest threat to the future of the United States economy and to the future of the US dollar, which is what has driven me to Bitcoin. Because there's probably going to be a time in many of our lifetimes, depending on how long we live, that at current rates, at current rate of this threat being a thing, not at current interest rates, the federal debt is going to be less than the interest. The GDP, the amount. The GDP is going to be less than the rate, the interest, the interest due each given year. Something needs to change with this. So, okay, almost there. I already did talk about the devoted dividend investor and why I'm motivated to load up on JEPQ. And if you want to know more about MSTY, there's another one, IMST. Those are both MicroStrategy tickers that try to take advantage of the super high premiums. Check out this. It's a 12-minute clip here from BTC Bull Rider. Hal Phineas, not to be confused with Hal Finney, talking with a woman named Stacy Toshi. I thought it was very interesting. Last but not least here, are we having a flashback to the 70s? Coincidentally, it's almost the same level as you can see in the chart. Same concerns. 1970s, the decade was marked by stagflation, a combination of high inflation and stagnant economic growth. I want you to keep in mind, this is the S&P 500 priced in gold, not in dollars. Huge difference. If you see people talking about talking about a stock market crash similar to 1929, there's a fatal flaw when they present to you those charts, is that the US dollar was pegged to gold in 1929 and now it's pegged to nothing other than trust in the government. So could I see the S&P 500 crashing in terms of its gold price between now and 2030 or even beyond 2030? I absolutely could. But could I see it crashing in a similar way that we saw with the Great Depression in terms of dollars? Absolutely not. There's it's not possible, because the US dollar is a greater bubble than anything else, than anything we've looked at. If you look at the S&P 500, the NASDAQ, and the Dow Jones priced in gold, they all peaked several years ago. The S&P 500 and the NASDAQ peaked in 2021, December 2021. The Dow Jones in its gold price peaked in 2018. We are in a bear market when you factor in the price of gold, or if you factor in the price of the US dollar as it used to be before 1971. So I know things look better than they actually are. I know that things look exceedingly frothy when it comes to prices in dollars, but that's just not the case, because the fiat dollar, the US dollar, is a scam. It's a Ponzi as it exists right now. If you want more information about that, just look at the first image from my video yesterday. You can see the money printing has been insane, especially lately. So anyway, I hope you're having a happy Saturday, happy Easter weekend if you celebrate that. And that is all I have for today. Be sure to hit the subscribe button, smash the like button, all of that. And I'd greatly appreciate any support in this channel that you could give. But otherwise, that's all I have for today. Hope you have a wonderful day, wonderful weekend. And I will most certainly be seeing you in another video. Peace.